Be so hard. I really gotta stop being hard on myself and remember I am not made of any metal, I am not a robot. I gotta take it easy as I play some lo-fi. Let my mind clear as I talk to one side. Stop comparing self and just relish your life. Always be patient through the trials and tribulations and be honest with yourself. Tell yourself no lies.
So you want to learn how to trade for the year 2026. This is my crash course on the information, the top information that you need to know in order to be successful when trading or develop a system when trading, including psychology and my simple process for trading. If you want to move forward on your journey, here's the steps. Let's go. Five basic questions about trading. What is futures trading? Basically, an agreement to buy or sell something. Even more plainly, speculating on if the price of something will go up, down, or range. There are different ways people trade or participate in the market. I primarily trade futures, but the basic information I will be giving in this video can be used to form a baseline of information on the subject. From this, you should be able to get an understanding, then track and improve your own personal trading problems and journey. Risk in trading. Trading has different risks depending on who you are and your situation. The main one most people think about is losing their money, which is a valid concern and possibility. That's why it's always important to remember never invest more than you're willing to lose. The other important thing about trading is your psychology, along with developing your trading plan. Backtesting, forward testing, and live trading will show you where you need to improve, not just in trading either, but in your general life, because not doing so will affect your daily trading. The risk is having to develop into a better person. The next is the time and effort you'll spend learning this. There will be times where you can't go out and do things, spend money, or have distractions, even though there's no guarantee of success in this. Why should someone trade? Everyone has their own reason for why they want to trade. Most of the time is dealing with money, in all honesty. So 4 questions that you can ask yourself that I asked myself were: 1. Why do I want to trade? Pick something meaningful. Otherwise, when it gets hard, you won't want to continue or do it the right way. 2. Why did I pick that as my answer? Get a better understanding of why that is so important to you, and if it invokes some type of emotions from you. 3. What am I willing to sacrifice to achieve this? This skill and this journey will take something to learn it. Maybe money, maybe time, maybe your identity, but it will cost something. Make sure you're willing to pay that cost. And 4, what core beliefs and objectives will help you maintain your resolve even during low moments? Again, this will challenge you. Challenge your values in the way you think and process information. You must believe in what you are doing and that you can do it. This industry comes with a lot of sad and coulda woulda stories. You will be one of them if you do not have resolve and take it seriously. Ultimately, everyone must determine what reason they have for trading. Regardless, in my opinion, having a basic understanding about reading, charts, economic news, system-based skill building, and emotional recognition are good skills to develop. How long will it take? First, everyone's version of success is different. You must determine that for yourself. The main things I look at were what are the things successful traders and non-successful traders were doing. Then taking that information and seeing what the main issues were. Things like how many trades they took, how long they held, how much leverage they used, what's their journaling process, and etc. I took that info, backtested, then journaled, and created a system that worked with my psychology. In my eyes, true success comes once you start doing these things. I'll include more details later in the main section. 1. Create a trading system and schedule that works for you and your psychology. 2. Be honest in exploring your emotions and modes or moods while trading or thinking about trading and how they affect you. Be realistic with your goals, milestones, and time horizon. Also give yourself grace during this process. It is not overnight. It is not over weeks. This will be over months and possibly years of learning to be profitable. So keep that in mind. 4. Track your data. Journaling is important because what gets tracked gets improved. And 5, don't focus on P&L. Reward yourself on how well you follow the system instead. As for how long it will take, that depends on the individual. If you learn fast and commit to those rules in the build-up, you could see results within a year or two. More will take longer, and even more will quit. This also has to be something you're suited for. If you don't have the resolve or mental capacity to deal with some of the stress and uncertainty that comes with trading, if that's you, you will not be successful unless you are willing to change that mindset. First, understand, regardless of how we feel about being a retail trader, is like gambling. But with the right data, experience, and patience, it could be a strategic gamble, like when playing poker. The system that I created and how I went about it isn't perfect or gives me insane returns. The purpose is to have a skill set that allows me to understand the market and economy better, and to be able to exploit an edge in the market for a profit when I see it. If you plan on getting in on every trade and making $1 million in your first 3 years just by leveraging more, that's a gamble mindset and you won't last long. But if you look at trades and data as information regarding probability, you'll start focusing more on leveraging only high probability setups, knowing you won't win all, but your odds are better with the same leverage. Also, let's draw down for multiple trades. Once I realized rushing in and out of trades was causing me to lose more money, I started being more choosy with my trades and holding them to completion or prolonged range because I had more confidence in them and myself. Like I said, you must be honest with yourself if you want and plan on being successful. This journey will be determined by you and your patience. Even after you get it, you have to continue developing and remembering how important your psychology is. I will be talking about it in multiple chapters in different ways. Next thing I'll talk about before we get into the charting and all that is economic data and sentiment effect. Remember, there is many different ways people trade and use data. This is just what I do and focus on currently. Economic news is important because it is the data and information that you typically can't see or tell from just looking at the charts. Most of the time, it's information like employment, job openings, payroll, interest rates, GDP, CPI, PPI, leaders speaking, and etc. Paying attention to this information can give you an edge, and in the market, specifically if it's not common knowledge, even in real time. There has been days where the market will suddenly drop out of nowhere. Then I'll look on the TV, and the movement is because of tweet or something, which leads to me talking about sentiment, which is basically how people feel and respond to the information they're receiving. The thing with sentiment is it's not always logical. There has been times and things happen or information was released that should have caused a rally in the market, yet it caused the market to go down, merely because of the way the media spent the story or them not understanding the bigger picture. The more you learn about trading and economics, you'll be able to get a better understanding of what data and sentiment will affect the market that you're trading. I primarily trade gold in the S&P 500, so I look at more of an Australian and Canada and Japan's economy because they're big on gold and bonds. S&P, I look at American economics and how the top contributing companies are doing, and so on. These are just some examples of learning what data to pay attention to. The more you learn, the easier it will come, and the more you will enjoy learning about these new things because it will improve your knowledge, help you make better trades, and help you better plan your financial future. So this next portion will have a lot of information condensed because this will primarily be the meat section of everything. Okay, so now we'll get down to some of the main lingo. If you need to know any more in-depth information about everything I'm talking about in this video, check out my other educational stuff in my Fox Education playlist. I primarily trade futures, so that's what I will mainly focus on. Ultimately, what we're doing is determining if the price of something will go up, down, or range in an area. The ISO or ticker symbol is a shortened version of a full name of what you're trading. For example, the S&P 500 symbol is that I use is the MES or the ES. The first one is a micro size position and the second one is a regular size position. Next you have the bid and the ask price. This is how much people are willing to pay or sell for the items in the market. Spread is the gap between the bid and the asking price. On the chart,
The price moves in increments called ticks. You also need to know about candles, which is the name of types of charts you can read. Basically, is how the charts show movement. The body shows volume of buyers and what direction and range. The market wants to go in. Wicks are around or another part of the candles. It shows where the price went, but just didn't have enough strength to stay there. The next group is fundamental language. Things like scarcity, not enough of something going around, economic indicators which affect price, risk management. I talked more on this subject in the last chapter. Knowing this helps with long-term investments, help predict trends, and understanding market more. Leading and lagging indicators, meaning information that is real-time or previously known. Candlestick patterns, there's a bunch of different ones. I really only pay attention to the engulfing ones and basically the candles that were the engulfing ones, basically a candle that had a body bigger than the previous candle. I look at long wicks, morning and evening star, and I'll show some of these pictures of these. These are just like the main lingo, morning and evening stars, just because to me they show different volume reactions. I look more at the chart patterns over individual candles, which brings me to the chart patterns. Again, there's a lot of different ones, too many in my opinion. To me, to primarily look for levels, trends, and triangle formations and ranging. To me, that's what all the patterns boil down to. So I draw the major trend lines, draw levels where the price has hit multiple times, combined with the Fibonacci, which is a tool to help find trend line levels. Then wait for price to break those levels or break from in a triangle formation where the price got squeezed in one direction eventually. My levels are like a zone where the price has trouble. Major trend is the direction the price has been going in for the past couple of months. Minor trends is very short change in market for a few days or weeks. It's important also to know the market cycle phases. One is accumulation phase, when investors buy after price has dropped, getting ready for a price to rise, which is going on right now with the gold. Trending market, when the price clearly rises or falls. That's what was going on in the month of January. It was clearly going up in an uptrend and hitting all-time highs. Distribution, investors start selling expectation of a fall. That was what was going on around the peak of the market and right before it really started dropping. And then the correction happens when the price moves briefly in the opposite direction of the trend. And that was what happened in those 2 days when the market just completely lost all of the gains for the month of January. There may be more terms that I haven't said now. If so, I'll break those down once they come up. And when it comes to the websites, most of the time I use TradingView. I like how easy it is to understand, operating, and understanding your risk to reward. They also have back testing capabilities and demo accounts for really reasonable prices. Forex Factory is normally where I get my economic news release information from, again, because it's easy to read and operate.
All right, this next part will be basically my charting and then my trading system, which is really just 7 confluences that I pay attention to, along with my indicators and how I set up everything. So first of all, like I said, you gotta go to I went to the higher time frame and drew my trend line. This is the larger trend line. There was a smaller trend line with this upward movement, and that's what I use for my levels and my zones using my Fibonacci. Again, if there's some stuff in here that you don't understand or that you need to know more information on, it's in my Fox Education folder. This is just a crash course to give you the blunt information, my trading process, and the psychology and systems. So now I'm going to come down to a smaller time frame. So like I said, these are the levels and the zones. So these are like what I'm looking for. And again, like so if I want to use my Fibonacci on this, I'm taking the bottom of that. I'm using these bottoms as a trend line for the direction that the market was going in. And then I can use those lines as indicators for zones, levels, all of that. So I'm going to move this down, that down, there. All right. And then I'm going to delete the fib, and those are my lines. Like I said, on my charting, like I said, I use the RSI. RSI is primarily what I use for gauging sentiment, seeing if the price is overbought or oversold, and paying attention if it's below or above the yellow line, or overbought or oversold. and then smooth moving average. Some people use 1, 2, 3, whatever. Me personally, I use the 4. For some reason, when I did the 1 or the 3, it has a different algorithm than the 4 smooth moving average. Even though I only use 3, something about the algorithm aligns better with my trading strategy, with better entries and exits. And so I keep it at that. I put it at 40, 75, and 225, and it works for me. My confluences that I'm paying attention to are: 1, is it in my approved time frame of trading? 2, economic news. Oh, actually, let me go back to the time frames. So for me, when I did my back testing, I had better results when I focused on the time periods of 8 p.m. to 10 p.m., 1 a.m. to 3 a.m., 9 a.m. to 11 a.m. That doesn't mean though that I have to exit at that time when those are up. It just means those are the approved time periods that I 90% of the time can enter trades. Also on Sundays at 5, sometimes 2, but typically the rest of it, the other 10%, has to do with outside of that. So, and that also will come into play when you have your own schedule, when you make your own system. Maybe you work a third shift, you can do the 8 to 10 session, and then you gotta wait for the 9 to 11 session in the morning, or whatever schedule works for you. Okay, so I did the time frames. Economic news, so I check Forex Factory to see anything going on. I'm looking at the trend line, so if it's a downtrend, I'm looking at, and I'm going to show you these. So here, if I'm looking at these, because this was a good setup for the video, I just had to re-edit it because it wasn't working. So this was the entry time. Looking in an hour into the session, you see this big candle. That's the volume increase. I can also check volume by checking the data window over here, and it'll give me the volume. Okay, so approved time frames, economic news, volume increase, that's 3. I'm looking on break of trend lines or levels or patterns, or it's a wedge forming, a triple, double, top, bottom, whatever's forming. I am looking at my smooth moving averages. If it's getting rejected, as you've seen, it got rejected to 225, which is the red one. I'm looking at the RSI, looking at the sentiment of the market when I'm getting in. It was below the yellow and below the middle dotted line in the direction going down, so sentiment seemed like it wants to continue down. And then hold on, which one did I forget? Approved time frame, volume, economic news, trend line, a break, smooth moving average, RSI. That's it, those 7. So if I'm looking at this, and I typically go for 1 to 3 or like a 1 to 2, I really typically have like 2, 3 strategies. They kind of pretty much the same. It's just different risk to reward. So my main strategy is the Green Ranger strategy, which is what I just showed you, the candle, the volume, and which is the basis of all of my strategies. The only difference really is this Green Ranger is primarily in a trending market, and it's a 1 to 3 risk to reward. My 1-inch punch is typically on a ranging market or lower volume market. It's the same setups and stuff, but I only go for 1 to 2. And then my Viper trades are same setup. It's just 1 to 2.5, and those typically are pullbacks. If I see a strong pullback, like the start of this gold down movement would have been qualified for a Viper pullback at 1 and 2.5. Then once it continued down, showing me that the trend was down, then I would be feeling comfortable doing 1 to 3. So that's what it is. So this would have entered at 10:30, 1 to 3. Stop loss would have been above that candle. Entry at the bottom of the candle, I would have hit profit around 12:30. Then the same thing with the next day. Had I got in at the 20, waited for that candle to close to show me that it's going to continue down, and enter at the bottom of the candle, stop loss at the top. Oops. And 1 to 3. That's it. That's as simple as my trade goes. So when you're doing your back testing, that's it. That's all you're looking for. Trades between 8 p.m. to 10 p.m., 1 a.m., 3 a.m., 9 a.m., 11 a.m. There will be trades outside of that, but to me, those were the best odds that I had, the best volume happened during those time periods. The same back test, take the data. All my videos have what you need to track and all that. Get your system down, figure out what works for you, and use the psychology tips that I will be talking about in this video. And that's pretty much it. That's pretty much the system.
Now that you have an understanding of the basic trading information and lingo, a basic trading strategy, and a little information regarding psychology, I would say the next step is to backtest, forward test, demo, then work your way up to a live trading account. I have videos on backtesting and forward testing along with information I track to see what trading styles, time frames work for me and my schedule. I would advise you to do the same. If you want to learn the skill effectively, it will get you more familiar with how the market moves. Backtesting is developing a skill to spot changes in the market along with other data. Forward testing and demo along with journaling will help you get a better understanding of your emotions while trading. Why do you feel anxious or have FOMO, etc.? You'll also be able to see if the system is working in real time with a schedule and mental capacity along with building a habit or a routine when it comes to trading. You also have to be able to be real with yourself when trying to move to the next phase of learning. Don't just do 100 back testing trades and then think you're ready to do a demo account. Get good at back testing first, even if that means you got to do over 1,000, 2,000, 3,000, 5,000 before even thinking about forward testing. Then do 3 months time periods of successful trading and journaling before moving to demo or a live account. If you can't go 3 months with keeping that account and not blowing it, not over leveraging it or whatever like that, then you can move forward. Trading journal on a belt before moving forward. Even when you do make it up to a live account, just start going crazy with leverage because you think you're an expert. Nor stop doing the things that got you there. It's more important to protect your capital when it's trading. Most successful people focus on a process or a system for success. What they get for following that system is the byproduct. Next, I'm going to talk about psychology again. Now that you have a better understanding of charting in the market, understanding the markets and charting is easy. The trouble comes in when your emotions get involved. That's why I said journaling is important. Most of the time, we want to push our emotions down or hope they go away while in the market. To me, that works against you. Instead, I question those thoughts and emotions and their validity. Example, why am I so mad the price is going against me? Answer, because I normally only risk $300 per trade, but I'm worried about a past due bill, so now I'm risking $500, and I feel more stress is on me to make a set amount of money by a deadline. Solution, exit trade. Take time to breathe and take knowledge of my thoughts and emotions. Tell myself my system doesn't work if I don't follow it, and that I shouldn't have to chase money or good trades, because when I do, it only sets me back or create bad habits. Then determine after 30 minutes if I am mentally fit to still trade for the day. If so, reassess market and trade if it still aligns with my system. Then get back in at half my normal risk. If not, lock myself out for the day on trading to prevent FOMO. I also make sure to journal this information for my self-evaluations. Remember, what gets tracked gets improved. This is also developing a system and a schedule which helps you get into the routine that is effective even when you don't feel like it. Trading will expose your flaws, and it's up to you to see and fix them. If you want to be successful, it's also important to give yourself grace during this process. I previously stated the statistics regarding trading success rates, so understand this isn't something everyone will be able to do. It's also why the reason you're doing this has to mean something to you, so you can use it to keep moving forward when you don't feel like it. The last thing I'll get into before closing is brokers and their future goals. When it comes to brokers, you can get your own account where you fund yourself and deposit that amount. There's a lot of different ones like Tradevate, NinjaTrader, Webull, Robinhood, etc. The other route is through prop firms, which are companies that give you access to more funding for a fee, and you must also follow their guidelines. Each one can serve a different purpose, and you must determine for yourself what is best for your goals. Ultimately, the main thing to look at are: 1, are they regulated, and what is their reputation? If they have a history of discrepancies or problems and stuff like that, why risk it? 2, do they have what you trade, and is it understandable? You don't want a platform that you can't understand or you have restrictions on what you trade. What is the cost? 3, are there fees and percentages reasonable to you? No one wants a platform that charges too much to place a trade or asks for a big chunk of your payout. My personal take on which one to choose is both. So I chose to go through a prop firm that gives me access to more capital. Yes, I have to pay a fee, follow their rules, but I get access to way more capital with less upfront money. Example, getting a $50K account for $100. As for the rules, I use these rules as guardrails to make me more disciplined when I get my personal account. My first payout will be towards my first few payouts will be towards my essentials, then work towards accumulating 20 to 25,000 in payouts to put in a personal account to trade. That way, if there's ever any problems with the prep firm, I'll have control over that account and its capital. This is also how I include it in my exit plan, or taking profit out to make more money in the future, which leads you to future goals, because as you get your schedule, you're not always going to be trading or have setups. So what else will you be doing with your time to improve yourself and grow your money? Find what looks interesting, do the research on it, and then start planning. I plan on eventually branching into option trading. So my free time, I chart companies and listen to effective news and etc. So I picked something to go at it. Pick something to go at it as the systematic process that you use while learning how to trade. So in closing, I want to talk about a TED Talk that I watched one time that talked about learning anything fast. He said it's how Elon Musk learned how to build rockets. He says you have to focus on learning the top 20% of the most important information to know about that subject. You can learn the rest later as you go. So to me, this would be my top 25% of things I focus on when trading. And if I had to start all over, would say only focus on these things when I was starting. Like I said, I have more in-depth videos on my Fox Education folder about all these subjects, just to make sure you understand what these key information points were. I'll repeat them here. 1, understanding what trading is and the basic concepts of it, along with the risk in it and how people are successful at it. 2, be realistic with the fact that trading is considered gambling, but it's up to you to make it strategic gambling. 3, learn what economic news or data most affects your market and learn to determine what sentiment of that data. 4, understand the basic trading lingo and learn how to actually see the market as a trader, then chart it. 5, ingrain the skill set by repetitiveness, backtesting, forward testing, and demos. 6, journaling, psychology, and systems. Use your emotions to spot the psychology. Use the journal to understand the psychology, then create a system to tier the psychology. Have grace and repeat as many times as needed. And number 7, find a good broker and plan investments to help save money from taxes and for your future. Thinking back, if I would have started this journey primarily focusing on these 7 things, especially number 6, I would have been able to cut my learning curve by 50%. I hope the information in this video was helpful and informative on your journey. I've given you my version of a crash course information, how I trade futures, including my basic strategies and journaling process. If you're ever interested in seeing my trades or watching live, subscribe and hit the notification button. I will be showing in real time my trading process, wins, losses, and psychology for the year. Get money with me.
Trading will expose you.